Hi, everyone. This is Rob Roy of LA Wave Options, and welcome to TradeFinder Live. Seems like it's been a while since we chatted. It's just been a couple weeks, and boy, what a day we picked to come back, huh? With the Senate runoffs in Georgia. Futures are up, down. They don't really know what to do as things keep changing in the polling. I don't know if you've been watching it at all, but early the Democrats seem to have a pretty big lead, and then Purdue is now, who is one of the Republicans, is now slightly ahead. It looks like it's going to be a long night to figure out where things end up. One of the things I've been talking about is volatility coming in the month of January. And boy, if yesterday and today didn't show that, I don't know what will. Pretty excited about the rest of the year. But before we go any further, I have to show this disclaimer. If you're brand new with us this week, welcome. Happy to have you. We show this for every webinar that we do. It's important, it's required, and please take a screenshot of it if you haven't before. Read it in detail in your leisure. I'll point out a couple things that the powers that be want us to point out to you. Number one, we are not registered to give individual investment advice in the United States. And number two, we have a lot of international viewers. We have a lot of international subscribers with LA Wave Options. And therefore, any pricing that we talk about is assumed to be in US dollars unless noted otherwise. So those are the two key things that they want us to show you. So how does this work if you're brand new with us? The agenda for the TradeFinder Live is we'll go through, talk a little bit about the market. And as I said, the last couple of days been pretty interesting. I think tomorrow's going to be possibly even more interesting than the start of the week. Then we'll go through a review of trade alerts from our website that our subscribers at LA Wave Options enjoy. And then we'll go through and talk about case study considerations that we have found in the past. I'll review the ones going back to December 8th. And then we had a couple weeks there where we were off for the holidays. And then we'll come back and look for any new case study considerations for tonight. So that's the process. And you're welcome to, some of you already are, as far as asking questions. If we have time at the end, we'll go ahead and look for charts. That seems to be a favored thing of people. We do have a support staff here that can answer any admin type questions as we go through. But I want to note that I won't take questions till the very end so that we get through the presentation in as timely a manner as possible. And I'll take as many questions as I can get through as time allots. But please understand if your question wasn't answered, it's not that it wasn't a good question. It's not that you're being ignored. It's that we just simply ran out of time. And we invite you to come back again next week and ask your question again. We're here every Tuesday night. Well, now that the holidays are over. All right, so with that, let's take a look at the market. Couple things to look at. Number one, yesterday we started off with a big down day. In the last recording, if you haven't looked at it, please take a look at the S&P update where we talked about the January effect. January effect is a phenomenon, whatever you want to call it. A lot of people talk about it as a perception or a hypothesis that the month of January tends to outperform the rest of the year. Now, that doesn't necessarily mean that January is always an up month. It just means that it performs the rest of the year. If you have a down year, then January could still have been less down than the rest of the year was. And the reasoning for that, not to go through the recording too much, but is the fact that in December, you have some tax loss selling. People sell off their losers to offset capital gains. And therefore, they have money from those losers that they put to work in January. All the investment banking firms, investment managers, et cetera, they have their bonus money. They put it to work in addition to all the normal things that occur within dollar cost averaging programs, from retirement programs, IRAs, 401ks, et cetera, that go to work at the beginning of the month, which was yesterday. So we opened to the upside and we sold off all day. I sent out a note to our LA Wave Options subscribers that I was going to be watching the 370 level. And the reason for that is you can see here that there's some support resistance at 370. And if we are going to continue that move that we've been talking about for how long? All the way back to June of 381, and whether or not the market was going to make it there, thought it needed to hold that 370 level, let that act as support for that remaining move back up to 381. Somebody commented on YouTube with the recording today, well, what happens after we hit 381? Well, that's the $1,000,000 question, isn't it? We'll visit that if we indeed hit the 381 level in a recording. And I promise we'll go through and talk about, okay, now what next? That's the big key. One thing I would like to think about, if you've been with us at TradeFinder for a while, if you've considered subscribing to our website, now's a really good time to do that with January coming up, due to the fact that I think we're going to have a volatile start to the year, specifically in January. And I'll give you an idea when we go to look at our website of the case study that we'll use as tonight's example. But this is a really good time. If you have a clue where you think the market's going to go, then hey, good luck to you. And I really sincerely hope you do well. What we've been doing is beefing up our volatility strategy, which is our strangles. It's a unique trade. Hesitate to call it proprietary because people always say, be careful using that word. You don't know what people were doing 35 years ago. I've only been doing it 25 years. Haven't found anybody that's been doing the same thing, but we've been setting ourselves up to where we can be okay, regardless of which way the market goes in January, February, and March. That's where we've got things set up. January, February, March, the first quarter of the year. We're good whether the market goes up or down. Doesn't matter to us. So we'll be fine along those lines, and we've backed way off the directional stuff until the market gives us an idea of where it wants to go. That's a prudent way to trade, and it's how we give our subscribers some added insurances or comfort, is the fact that if things go awry in the election tonight and the market decides it wants to sell off big, come in tomorrow, it's fine. It won't bother us at all. So yesterday we closed just under 370. Today back above the 370 level. So here we are again, just playing ping pong back and forth right around that 370 level. I still think that that's an important level to watch over the next couple of days. If that level holds, if we do have a split between Congress, so that we don't have the presidency, the Congress, and the Senate and the House, if you will, all being controlled by one party, which historically the market hasn't preferred, then we have the opportunity to build and move back to the upside today. But notice today was an inside day, meaning that today's high was lower than yesterday's high. Today's low was higher than yesterday's low. So that makes a lot of sense. Inside days, outside days, those are usually points where the market is kind of undecided, similar to a doji for you candlestick fans. And I think going into tonight's runoff elections, nobody really wanted to pick a direction one way or the other. So we sold off yesterday. We got it back today. We're still pretty much where we were at the end of the year, waiting to see what the power structure looks like in Washington and where we can move from here. So yesterday we tapped the 30-day moving average. That's the fuchsia line on the low. Closed back, but below the 10-day moving average. Today we got right back above the 10-day moving average. So had we finished below the 10-day moving average again today, would have been a little bit concerned. The only concern right now, other than what's going on with the runoff election in Georgia, is that has now created a pivot point on yesterday's move. So on the 31st, we had a high. Yesterday gave us a higher high. Today, a lower high. So there's a pivot point right there. And that could mean that there's a move back to the downside. If we do happen to move lower, we'll see if we get any support at the 61.8% fib extension. On top of that, we have that A wave high going back to September. If we can't hold there, then it's, I use this expression, people always say, what are you talking about? Katie bar the door. It's an old expression. It's an old country expression. People talk about it. Katie bar the door so horses don't get anyway. So you come down here and we could have a pretty significant move to the downside and maybe even further from there. So a lot does depend on what happens with these election results tonight, on how the market reacts. Now, when we get a sell-off on a blue sweep, if you will, then maybe there's some point in time where we find a bottom, move back to the upside. We'll see. Here's the thing that I feel confident in, that there's going to be a rotation if the political power in Washington is all one party, if it's all on the Democratic side, there's going to be a rotation. That I feel very confident in saying. As far as what the market does, we're going to have to let the market tell us where things go, and we'll trade according to what the market tells us. We're not going to guess what the market's going to do. But what we'll be looking at, and then we have some indicators that tell us what sectors are doing well, et cetera. We're going to be watching for sector rotation and see where things are going and where we should look for the next moves. Remember, money comes into the market every single month through those dollar cost averaging IRA, 401k plans, et cetera. And by prospectus, by law, great percentage of that money has to be put to work. It has to go somewhere. So if the market is not doing well, if the economy is not doing well, the defensive-minded sectors tend to outperform. If things are going well, what normally happens in January is small caps outperform. So anyway, what a good day to start back with you on TradeFinder. Not much else to say, really, according to or along with what's going on with the market. So with that, I'll go ahead and show you just one of the trades that we closed on our website for our subscribers since the last time we chatted. And you can see here we had a Strangle. This is an example of what I was talking about with what we've really beefed up in our portfolio for our subscribers, is positioning ourselves to where we don't care whether stock breaks to the upside or the downside. Here in Overstock.com, which from a fundamental standpoint, if you like fundamentals, we're moving into the retail time of the year, right? So you would think that that could play into things as well as the technicals, but it was a really nice looking Elliott wave descending triangle. You can see the points of interest there, the A, B, C, and D, and moving down towards the point, we did have a doji here on the entry day with the fact that we could break to the upside or the downside and draw those arrows either way. Just to remind people, we are not picking a direction. We're not trying to figure out which way the stock is going to break. We've just identified a pattern that tends to show a breakout, and we don't care which way it is. We have ourselves set up with our options to where we are mathematically guaranteed if the stock breaks out, we will make money as fast as mathematically possible. I want to stress, we're not guaranteeing that we're going to make a profit in the trade. It's not what I mean. What I'm saying is that if the stock breaks out, we will make money on our position as fast as mathematically possible. The stock still has to break out. It still has to move. If it continues to go sideways, the position doesn't perform well. It's counting on a movement. We just aren't picking direction. So we're taking one of the most difficult parts of trading, right? Picking a direction, which way we're going to go. We're taking that out of the equation. We don't care. So we entered that. We sent this out on December 14th, and boom, right away, the stock decided to move. And you can see that we broke to the upside, but real quickly, we broke right up to a resistance area. So boom, boom, boom. 3 straight nice up days. 3 pretty good days in a row. You can see just on the last day, we were up 6.5%. And you can see the 2 bars before that were as big, if not bigger than those. And now, boom, we bumped our head against a resistance area. So when you can take and generate a 50% gain in 3 days, we're going to look to take that gain, especially with the fact that we don't know what's going to happen at that resistance point. Is it going to push the stock back down? Are we going to blow back above it? Those are still unknowns, but what we do know is if we close a position now, we've made 50% in 3 days. And so we wish all of our strangles would break out that fast. They don't all break out quite that fast. The average is more like 28 days in a trade, something along those lines. so 3 weeks or so for a breakout, but we do get them where they break out pretty quickly, and that's because we use a low reading on the ADX is giving us an indication that, boy, this has really been consolidating, and the fact that it's been consolidating so long, it's likely getting ready to move. So this gives you an idea of what the trade alerts look like for our subscribers. We send it out to you. It's posted on the website. Here's the position, what the position is. Look how wide this one is. So you might look at that at first blush and say, how can you make any money on this? You sent out where you were buying the 100 strike call and the 35 strike put. See, that's where the thinking is so wrong in the world of options, of being, you're so far out of the money that if the stock moves, you're not making any money anyway. Hopefully all of you that are watching realize that an option doesn't have to move in the money to become profitable. I know that when people are first starting out, that's kind of a common thought, that a lot of people think that an option actually has to move in the money to start making money. No, it doesn't matter where you start. Whatever the delta is, that's the amount of money you're going to make on the next dollar the stock moves, or lose if it moves against you. But the delta tells you how much an option will make or lose on the next dollar the stock moves. So here we are. Let's take a look at this picture again. You can see where the stock was trading just under 60, around 58 or 55, 85 is where we were. And we had a 100 strike call and a 35 strike put. Both of those strikes so far out of the money, you're thinking that there's no way, even on a movement in this stock, that you're going to make money on this. We did in 3 days. We made 50%, and the stock was only at 70. So it moved up from, call it 56 to 70 in 3 days. So it's a $14 move, which isn't that big. And you look at how big this triangle was and how much this stock can move in reference or in balance or scale to the stock and the movement. That wasn't that big of a move, but it shows you a good illustration of how the options work and how we position ourselves, because options are math. They're mathematical formulas. Yes, the market makers can fool around with implied volatility, but the rest of the formula is pure math. And if you understand the math, you can let it work for you. If you don't understand the math, it can easily work against you. So it's very important there. So anyway, that was one that I wanted to share with you that clearly worked out very well for us. Now let's go back and let's take a look. Let's step back to December 8th. So we did December 8th and we did December 15th, and then that's where we took our break for the holidays. We had Nike was a directional trade going back to December 8th. So you can see here's Nike in a wave 3. We'll put the DMI on there to see what that looks like. So let's go back to December 8th. We were here. We closed at 139.12 on December 8th. That was the day that we said, okay, we're going to let that count as our, well, we have 2 of them. I'll show the other one as well. We did a strangle that day as well, knowing that we were coming into the end of the year and still along the lines of starting to beef up the portfolio on the volatility side. So we did a strangle as well. I'll show you that one too. But here was Nike. And you can see now the ADX has moved above the positive directional indicator. So the ADX is telling you, hey, the trend is still strong, but the positive directional indicator is telling you buyers are backing away a little bit. Well, some of that could have to do with the fact that volumes back off towards the end of the year. We talked about the melt up in our market videos. We talked about the Santa Claus rally between December and Christmas, or Christmas and New Year's. All of these things are very low volume events because a lot of the traders take the entire month of December off. And then boom, then we had the big update. Now what occurred here, if you're wondering what happened on this day, Nike raised their guidance. They came out and they said, hey, things are better than we thought they were going to be. And that's one thing that the SEC encourages publicly traded companies to do. If they give guidance, which it isn't a requirement, it's just most companies do. If you give guidance and you see that there's a trend one way or the other, whether it's going to be a significant beat or a significant miss, they like for companies to come out and kind of guide a little bit early. So they guided higher saying, hey, things are better than we thought. So the stock jumped to the upside. So if we go back to where we were on December 8th, that was at 139, but we traded as high as 147 on this day. So, how much profit do you want to take? And let's assume that you said, well, we're still in a wave 3. I'm going to wait, which would have been a valid argument. Obviously, we would have had a nice profit at this point in time if you wanted to take it. But if you didn't, because the positive directional indicator is moving back up, the ADX is still moving up and hasn't reached 40 yet, you couldn't fault somebody for saying, hey, I want to hang in there and see if we can get more out of this move. So everybody's different. Some of you may have taken profits. Some of you may have hung in there. So we had a gap up. So we came back and filled that gap and kind of went sideways for a while, and we're still there. So we had that big move to the upside. We're sideways. If we go back and look at that gap up, you know it's coming, don't you? If you've been here before, you know what I'm about to say. We got overbought because we got away from the 10-day moving average, right? No security in any time frame is very far away from the 10-day moving average. And that's what occurred here. So we had to fill this gap. I always talk about that as well. Gaps get filled. Sometimes they get filled immediately like this one did. Sometimes it takes a while. And that's the issue with it. We know gaps get filled, but there's no rhyme or reason as to how long it's going to take for the gap to get filled. So we came down here to the 30-day moving average as well, just like the market did yesterday and today. Closed back to the upside today. So we're trading at 141. We're still above where we were on December 8th. So if you didn't take the gain back on, what day was this? The 21st of December, you're still profitable and waiting to see what happens from here. I'm glancing at the futures just to see what's going on. Really, they're down a little bit, but not a whole lot happening at this point in time. So that was that one. And then we also did TFC, which we sent out to our subscribers as well. We have this triangle. So TFC is Truist. It's the combination of two banks, Sun Bank, I believe, and BB&T. They came together as a merger, and now they're called Truist. So they changed their name. They didn't pick either of the two names. So there was our triangle that we had. Pretty clear triangle formation. And if we go back to December 8th. So this is what we were looking at the last time that we chatted. So pretty nice symmetrical triangle after the run up, bit of a wave 3 consolidation quite often. Now, Elliott, just to shift gears a little bit here, Elliott would say that's likely to break to the upside. When you see a triangle within a wave 3 like that. One of the things that we educate our subscribers on at Elliott Wave Options is, it's been my experience that when you find a triangle, and they're everywhere, Elliott talks about that, there's large triangles or small triangles, but it's been my experience that even in a wave 3 scenario like this, the stock can break either direction. So we don't choose to pick. In other words, following just pure Elliott wave, you would have just gone long. But we sent it out as a strangle. We talked about this a couple weeks ago here in TradeFinder. To me, that's the more prudent way, especially with the system that we have set up to where we have a good chance to make a profit on a movement. And then you look at the ADX and you can see that the ADX is straight down. That doesn't give you a whole lot of confidence that you're going to break to the upside. Maybe this breaks to the upside, tears off and runs right to that 54 level, the wave 5 target. But do you see the wave 4 forecast there? And again, that's a forecasted move of the wave 4 if it were to break to the downside. So my point is that let's just cover them both. Let's just cover both bases. Why do we have to pick? It's not that big a deal. It does limit some potential gain. If you're playing in a position, or you're putting a position on where you can make money whether it goes up or down, you're not going to make as much money as if you picked the direction and got it right, but you're putting the percentages much higher in your favor of making a profit. So maybe if the profit isn't as high, you have to decide for yourself what you would be more comfortable with. Would you rather have more risk involved, less probability of being right, but a higher percentage gain when you are right? Or would you rather have a higher percentage chance of making money, understanding that making the money you're going to make will likely be less than if you pick the direction and got it right? That's the trade-off. That's just, it's risk reward. That's trading's that way. A lot of life is that way too, isn't it? So that's where we were. Let's move forward to today. We had a downside breakout here on the 14th of December. It looked like, oh, there we go to the downside, but no follow through day. You've heard me talking all about our triangles and support resistance levels, major moving averages, etc. You know that I'm big on a follow through day. When you have a breakout day like we had here, that doesn't mean anything. The market gives you head fakes all the time. It shakes out the weak hands and it wants to know who's committed to their direction, to their position. So you have to have a second day, follow through a confirmation day. We didn't. It bounced right back to the upside. And so now here we are back to the point of the triangle and then back down again, back to the upside. We can't figure out what it wants to do. We've tested this breakout several times and we're still there. We're still at the point of the breakout. So we really haven't broken out yet in this position. So we continue to wait, but really it hasn't changed much at all since where we were 2 weeks ago. So we got plenty of time going out to March. So we'll just see what happens out into the future. So not a big deal there. So that was those two from the 8th. Now we looked at FNV, were strangles that we did in our last broadcast on the 15th. And let's go back to 15th. You can already see, hopefully, you can already see the really large descending triangle that we have here. And note that we had massive support right there at 130. There's your set of lower highs. So this one was a large descending triangle formation on Franco Nevada. We had the ADX starting to curl back up. We thought, well, maybe it's kind of showing us that something's about to happen here. Maybe we're getting ready to move. And it looked like it. There's another example of what I was talking about. That's a breakout, no follow through day. It gapped up immediately. The next day, came back and filled the gap, reset, start over, testing the support level, broke out to the downside, no follow through. Didn't get a follow through day to the downside either. And now we're back right to the point of the descending triangle. Now, the positive that you would take from this is the stock can move when it wants to move. You can see the volatility that's built into the stock. So when it's ready to go, it can go. And it's going to make a significant move. You can see how big the mouth of this triangle is. It's huge, which is one of the things that we were attracted to it. But when you look at this and you see a false breakout to the upside, a false breakout to the downside, and this is key, and this happens sometimes, you realize the triangle wasn't finished setting up yet. So take those lines away. Here is actually the triangle. So the support is at 125, not 130. And you can see going back, that makes sense, going back to June. And this high, and even today's high, has just given us another and a set of lower highs. So what happened with FNV is the triangle became larger. You can get a false breakout in one direction, and then the stock can test it, continue up, and have a true breakout in that direction, or it can give a false breakout and the big move being the other direction. But you don't get a false breakout to one side and a false breakout to the other side. That tells you the triangle isn't finished being formed yet. We're still building a bigger triangle. Now that can be frustrating when you're in a trade because you're thinking, oh, we're ready to go. No. Oh, we're ready to go. No. And you kind of get excited that the stock's getting ready to move and then it doesn't. But what I talk to our subscribers about is when you are creating a larger triangle, we talked about this with Tesla going back. What a perfect example of Tesla was. But when you build a larger triangle like this, the patience is usually rewarded because the breakout that occurs is normally significant. And the breakout could be even more volatile than it would have been if the previous triangle would have just stayed in place and we broke out from there. So you're patient. You realize these triangles break out extremely high percentage of the time. I'm not going to tell you they break out every time. Nothing's 100%, but they break out an extremely high percentage of the time. So we just wait for when that actual breakout is going to occur. And so then the other one that we looked at was MKC, Mccormick. And before I even draw anything, you can see that it's still done nothing since then. The ADX curled up, looked like something was happening. It's curled back down. So this was just still in a super tight consolidation range there between 90 and 95. And if anything, we can say that, well, maybe the triangle is adjusting a bit instead of more of a descending look to it. Since we were together, you can kind of say that maybe it's actually forming more of a symmetrical triangle. Maybe it's more along those lines. Regardless, this one is yet to break out either. I don't think any of those, Truist, FNV, MCK, none of those are a surprise. We weren't expecting things to break out in the last 2 weeks of December. That's a quiet time. That's the melt up time. That's the Santa Claus rally because you don't short a dull market. It's a dull market. Things don't tend to be very volatile. We do expect things to start moving now. That's what I was talking about. If you ever thought about being a subscriber, things I think are going to move now. And we've got a lot of these strangles that are on. And we'll just whatever happens in the market, we'll just let it do its thing. And we'll trade accordingly to whatever happens with the market. But so that's McCormick. So that catches you up on everything that we've looked at over the past, or that we did look at over the previous 2 weeks before we took our break. And now we'll go ahead and take a look, see if we can find anything. Interested to see I was just looking at some of your comments. Anxious to see where you guys would feel that you wanted to trade now. There are four. If you're brand new with us, this is a software program called Profit Source, which is what I use. People ask about it a lot because they like the display of the charts, etc. It's a very clean look. It's easy to see the patterns, etc. ProfitSource.com is where you could get more information on it if you were interested. And if you're an Elliott Wave subscriber and you have Profit Source, they have pre-computed my searches in there for you. So all of our Elliott Wave option subscribers can see, if they have Profit Source, the exact results that I get each and every day. That's kind of a neat thing from an educational standpoint, because people can ask a question. Hey, I saw this on the search result. You didn't send it out as an alert. Can I ask why that one wasn't chosen over another one? Or maybe they have a question, why did you pick that one? But you see how that can be valuable from an educational standpoint as to why did we pick one, we didn't pick another one? Because you see right there, there's 4 results. So let's take a look and see what we have. Personally, I don't know that it makes a lot of sense with where we are right now on January 5th with the runoffs in Georgia and what could potentially happen from there to pick a directional trade. But if you wanted to, we could. You can see we have a pharmaceutical, we have Intel. Yikes, that's amazing to me. They have been slamming the heck out of that stock on the financial networks. KLAC, and then a financial, which makes sense. So let's go ahead and take a look at them and see if there's anything that looks really good, but it's going to have to look awfully good to do anything with it. So let's take everything off but the DMI, and a little bit of a break, but it's not up to 20 yet. Now, the reason that this would show up as a search result and the ADX hasn't triggered yet, which for me is 20. If you go on the internet and you read about the DMI, Look for educational information on the DMI. They'll tell you that you want the ADX to be breaking up above 25 and be between the two directional indicators. I like 20. I've changed the settings, which is another cool thing you can do with Profit Source, is you can adjust the settings to these indicators. The normal period for the DMI is 14. I changed it to 13. So we have 13 and 21, which are two Fibonacci numbers. They're both in the summation series. So the fact that that's just a little bit more responsive, I look for the ADX to break above 20 as well. So they kind of go hand in hand. So slightly more aggressive on the ADX. To me, especially with having the periods at 13 versus 14, if you have the ADX and you wait for it to break above 25, you've missed a pretty decent part of the move already. So it's kind of late at that point in time. So we finished the wave 5 here, or did we? We had 144% wave 5 extension. So it's already an extended wave 5. You can see where the consolidation has been occurring since back there September at 260, broke up, came down. So as we zigzagged up, came back down, tested it, and now we're making our way to the upside. But the ADX hasn't triggered yet. So for me, I couldn't feel comfortable going long this position at this point in time. What I would like to see, just thinking out loud here, is these two directional indicators to continue to separate, the ADX to actually break above 20, and then I would want to see this previous wave 5 high taken out as well. So I'd want to see the stock break above 300 and have a qualified DMI, in my opinion, and then that one would look pretty interesting. But I just couldn't do that at this point in time, not with that chart. So let's look at Intel. As I'm talking about the fact that they have been slamming the management here, that they're way behind, AMD's eating their lunch, all kinds of things like this. Sometimes you wonder, when a stock is getting slammed that hard, are there ulterior motives behind the scenes? You know, are they doing that on purpose so that they can push the stock down and get in? It's like analyst upgrades and downgrades. I'm always suspect. I don't even pay attention to those, because you never know. The analysts work for their firm. Their job is to help their firm make money. So is that a legit upgrade or downgrade, or are they just trying to help out their firm? It's difficult to disseminate that at times. So the problem here with the Intel chart is we have all these gaps. Big gap here, big gap here. That kind of messes up the patterns a bit. And then you can see we came up and closed the gap back there on the 4th of December, headed back down. That was probably some of that stuff that was being talked about as far as ragging on the management of Intel is not doing a good job, losing ground to competitors, etc. But the stocks turn around and come back up. You know, you get to the point where you flush everybody out, which is kind of what happens when you have analysts ganging up on a stock, etc. It flushes out again the weak hands, and that allows them to come in and take a position and get in early to an opposite move. All this stuff happens all the time. You don't think this is going on behind the scenes. It's all part of the big scenario that happens, which is why, to me, very difficult to trade solely based on fundamentals. So what we do is we use fundamentals first. So if we're looking for directional trade, we're only scanning stocks that are fundamentally sound. So that's it. That's the end of the fundamental part of it. Then we look at the technicals from that point on. Does it work with our confirming indicators as a result? What's the Elliott wave pattern show? That's the process of what we go through to identify directional trades. And I think you would agree that makes a lot of sense. So now we have the ADX is breaking above 25 here. There's pretty decent separation between the two directional indicators. We're right back up here at this area of resistance. So again, I don't think it would make a lot of sense to jump the gun here. Would love to see that 51 level taken out with a follow-through day, because look what happened here. There was the break above it, which was just more closing the gap, but no follow-through day, so back down we came. If we could break above that, this level here with a follow-through day, then maybe we come all the way up and look to get back up into somewhere around this area. That could be a pretty significant move out of Intel. So I just think that this one is too early. It's a good watch list trade. Keep an eye on it. The DMI would suggest it is going to break through that level. So if you were an aggressive-minded trader and realize that, hey, that's an aggressive trade, speculative trade, if you will, then you could go ahead and do it because it's a pretty decent looking DMI. But I'm fairly aggressive, but over 25 years, you get your hand bit enough times from being too aggressive, you back off a little bit and you say, okay, let's be aggressive when we can. Let's be prudent the majority of the time. And so the prudent move is to let it break above that 51 level with a follow-through day. That's the prudent way to trade it. So I couldn't pick that one as our case study for this week either. KLA, see, and take all this stuff off again. Wow, look at that. The ADX had a very nice run. Really good confirmation on this move. There's your zigzag pattern there. Wow, that was good. Oh, look at that. See, I don't look at this stuff ahead of time. 161.8% extension. And you would have looked at your DMI back there to identify that was likely to go past the 100% extension. See how it kind of bumped its head a little bit back down, went sideways. When you get the 100% extension, which is all you're looking for, is it going to go to 161.8? That's when we take a look at the DMI specifically, but all of our indicators, we look at them all, but the DMI carries a lot of weight. It's my favorite of the confirming indicators. You would look at that and say, man, that's a great looking DMI. So we could just walk it back and I'll show you what I mean. So here we are back when we're looking to break above 100%. You're thinking, well, do I take profits now? Do I wait? Well, the DMI is telling you, we got a long way to go yet. It's likely we are going to hit that extension level. And it did. Look at that. As soon as it hit the 161.8% extension, doji, down day. This is just this Elliott Fibonacci stuff. If you're just watching these and not trading with it, why not? I mean, what are you waiting on? How many times do we have to show you this stuff before you decide, let me give it a try? Our subscriptions that I'm talking about, we only charge by the month. You don't have to make a yearly commitment. There's no annual commitment here. You don't have to sign a contract. You're not committed to anything but kicking the tires for a month. You don't like it, you don't renew. It's pretty simple stuff. But this shows you, I mean, that one, 161.8% extension. Now, the next thing is, could we go to 261.8? That doesn't happen as often. 161.8 happens fairly often. 261.8, not so often. You really have to be pretty comfortable in your DMI at that point to see a further extension up to that 261.8% level. Now, if we put the Elliott wave on, you can see we're in a wave 3. The ADX, it's trying. But again, here what I'd want to see is a break above this 161.8% level with follow through. But look at the problem here. There's your wave 5 target, not that far away. We're trading at 265, probably a really good chance we go to 300 right in here. Do we make it all the way to 261.8? I don't know. We'd have to take a look at the DMI at that point in time. But you could certainly make a case for, you've heard me talk about the round numbers and the tractor beam effect using the Star Trek analogy of when you get that close to one of those big round numbers, it just kind of draws the stock to it. That's kind of how things work. You could certainly make a case for that one doing that to the 300 level, but the 261 extension is all the way up at 317. You would need more than just the tractor beam. You would need a really strong DMI behind you to show that. So that's another one that just really couldn't get too much behind at this point in time for a continued move to the upside. Got a lot of watch list trades though. I mean, taking a look at Intel, keep an eye on that one. And KLAC, can watch that one. When you hit 161.8, boy, you really have to have a lot of confidence that you're going to go higher to the next level because you just dropped down in the percentage chance. And last one is a financial. Do think interest rates are going to break out to the upside, but we'll have to wait and see. Both the 10-year and the 30-year are in triangles. If you watch the market update, if you haven't, take a look at it. If they do break to the upside, then that's going to be good for financials. And let's take all this stuff off. And we look at the DMI here. You can see the ADX is curling up. Still haven't got to 20. So this is another one that shows up. And the reason that I do this, finishing the thought that I started before, is even if you put the ADX breaking above 20, I talked about how above 25 and you likely miss the strongest part of the move. But even using breaking above 20, sometimes you're going to have, ADXs at 25, 30, 35. So I move it down below 20 so that when you have scenarios like this, you can keep an eye on it and catch it right when it breaks above 20, if it does. You don't want to jump the gun and assume. You could look at this and say, well, look, the ADX is curling up. There's separation. It's going to go. It's going to go and break above it. No, you don't know that. Sometimes it looks like that and it fizzles out and turns back the other way. You have to actually let it trigger and make that move. And it's just not there yet. I think this one could correspond pretty nicely with, so here's another financial in a triangle, similar to our Truist triangle. This is an ascending triangle right here at the wave 3. If we get an upward breakout in interest rates, then Truist and MTB, they're going to break to the upside. The stocks are going to move higher because it's easier for banks and financial institutions to make money in that scenario. So there we go. We went through the entire list of the directional pre-computed ones, and not one of them would go out as an alert. I wouldn't even want to say, hey, let's let that be our case study consideration for TradeFinder this week either. Just none of them have triggered yet. So basically what you just got was a good insight into what I do every day. This is my day, what you just witnessed here, looking at the results of the searches, bringing the charts up and analyzing the pattern, looking at what's there. Is that worthy to be sent out as an alert? Would you enter a trade there? And so we just went through 4 that no, none of them would go out as alerts, even forgetting about what's going on with the runoff and the elections. And must have been some bad numbers that came in because the futures just took another leg down. So I don't know. We'll see how things pan out through the end of the evening, but it doesn't look super encouraging. All right, so now what we can do is we can combine 2, because another thing the folks at Profit Source did was they added in some more Elliott Wave tools. So now you can mix and match some things. So what we can do is take this off and look at our consolidating stocks, which that's where we've been, as I said, beefing up for our subscribers. But there's 138 of them. We need to wrap this up if I'm going to look at any stocks. So we don't have time to look at 138 of them, but you could go and say, hey, are there any consolidating stocks that are in a wave 3? Well, now we're down to 4 again. So we just took 138 possibilities and dropped them down to 4 and moved this into something that Elliott would say, there's financial, and then 2 S&P things. So that's a good symbol, right? Cash. So if we could find one of these in a consolidation pattern, then it would be a lot more interested in the financials because of the fact that interest rates are consolidating and in triangle patterns as well. So we take this stuff off. Let's see what the other one looks like. That's not the greatest pattern. Let's see what Arch Capital looks like. Okay, now that one's better. All right, let me see what the options look like here, because this could be, now the futures are, they must not be getting in good numbers because the futures are continuing to go down now. So we can go out to March and Well, it's thinly traded. You can make it work. 15-cent. Let's just see what happens tomorrow when the market opens. There's a little bit of slippage there. In other words, there's a little bit of spread between the bid and the ask, but this looks like the best looking one by far. So we're going to use this one. This is going to be our case study because we have a wave 3, but look at that wedge. Really, really nice ascending triangle there. Maybe yesterday tried to break out, no follow through today. Maybe it tries it again, or maybe you can say, you're a little too strict on drawing your trend line. You can just come back here and not even go as far back and draw your trend line here. Doesn't matter. It didn't have a follow through day, so it doesn't count as a breakout anyway. So regardless of how you draw the trend lines, this one looks to be the best. So that's going to be our case study for today. So 1/5/21 is ACGL. I feel a bit more confident having a strangle position anyway versus a directional trade, considering what's going on with the market anyway at this point in time. All right, let's look at some questions, some charts. Clorox. So you can see that a little double bottom there. Isn't that interesting on the ADX down around 10? So we don't get that low very often. Little surprising to see that Clorox is still, when we looked at this one in the past, still consolidating as it is. This might be something for high value volatility traders, those that are larger accounts. But you can see that pretty nice descending triangle there. Just it's an expensive stock, but it looks pretty good from that standpoint. Let's take a look at the options real quick. Interesting with this, the mutations of the virus, etc. I guess people think that the vaccines are going to be the end all be all, so we don't have to worry about it anymore. We don't need cleaning products. It's pretty interesting that because you can't find them on the shelves. That where's the fundamental case? The stock should be going higher, right? You can't buy any of this stuff on the shelves. Yeah, it's expensive. So, but it could be set up really well. It's just an expensive one, but yeah, nice pattern. How far would I go out? April, yeah, Mount April is what I was looking at. You've got some liquidity there, and you could set it up really well with the deltas. It's just going to be expensive, but especially with a stock like Clorox that before this whole COVID thing wasn't necessarily a volatile moving stock, but since then it certainly has been, hasn't it? So yeah, from that standpoint, certainly would look at that. Let's take a look at IPOC. Pankaj. You aggressive, aren't you, Pankaj? You always come up with these lower dollar vertical moves. You already know what I'm going to say. Why would you even ask about it? You know exactly what I'm going to say. I don't like these vertical moves and come back vertically. You could have stated my case for me. But that vertical move came back. It didn't label that as a 4 on that move. So that makes me a little bit nervous. At least this one has a little bit of trading history to it. It would have felt better if it actually could have held this first move above 10, because that's when the growth-minded mutual funds and investment accounts can get into it, but it fell back down, and then it went back and it based at 10 for a while, and then it broke again above here. And now it seems like there's interest, right? There should be some, yeah, now there's volume behind it. So we're getting people behind it, but look at where that ADX is. I just want to see this one calm down a little bit. So the vertical breakout, I like the 45-degree move. It goes vertical, it comes back down, and you see this big move to the upside here with the ADX. It got above 50. The buyers have gone away for a little bit. And what would be ideal, this may not be what you want to hear, but what would be ideal is for it to rest a bit, come back down and test 13. And if it were to hit that, that could be a really good entry. That could give the ADX time to calm down, let the DMI reset up and satisfy this wave 4. And then maybe you're off to run up to 20, which is where it looks like it wants to go at this point in time. But hard to go long right now with that ADX. W. Wayfair, you know, there's a short seller that lost his rear end on this stock. I'm not going to say his name because that's not fair. But back when the stock was trading at $85, he called it the greatest short that existed in the market. He thought their business model was flawed. This thing's going out of business. They're going to go down to zero. It's at, look where it is now. It got up to 340, and at $85 a share, he was saying it was the best short in the market. So yeah, that was clearly not a good call. So really nice descending triangle here as well. I've looked at this in the past, and there's not been a lot of liquidity. Let's take a look and see if anything's changed because it's been a while. So you jump from February to May, that's a problem. March or April would have been okay, but jump into May, well, there's actually some liquidity in May. It's another expensive one. Really expensive. Really expensive strangle, but you're going out an extra month too with May. March, April is kind of where you want to be on the strangles right now. But at least there's some liquidity now. There's a lot more liquidity than was last time I looked at it, which was granted a long time ago. And you could look at this and say, yeah, you drew the support line wrong, Rob. It's down here, which you could certainly make a case for that. So somewhere between 220 and 240 is support, certainly lower highs, but really good descending triangle, super volatile stock. That would be a great strangle for a larger account. That would be really good. Craig, how about 38% level before the 0% on an S&P pullback? Absolutely. Any of these fib levels could hold. It's a valid point. It's just if we don't hold 61.8, coming lower, 38. I mean, any of the fib levels could hold. That one, it just feels like it's in the middle of things, but it's possible. It's possible. I mean, it's a valid point. Lindsay asking about OSTK. Let's take a look at it again. We have been keeping an eye on this one, especially with it breaking out as nicely as it did. And this one may very well go out as another strangle because, yes, it has formed a larger triangle. We were fortunate that we got the 3, and look at the exit that we made. So there was our exit at 70, right back down, boom, 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 all the way back down to support right after that. We could not have timed that one any better on our exit. I mean, we nailed it. I try to be fair. I mean, I show you ones that, hey, we got out and we could have stayed longer, but Monday morning quarterbacking and stuff. So, and I try to be fair and show, hey, when we nail one, and then when we could have made a little bit more, but you never second guess. You can't do that. It'll drive you nuts. It'll give you an ulcer. It really will. You can't second guess yourself. Make your decision, stay with it, move on. But this is, yeah, good spot, Lindsay. We've been watching this one. Probably going back out is another strangle. Craig's asking the same thing about TFC. TFC is forming a larger triangle. I really think that I see what you're saying, but there was our original one. And we did have a false breakout to the downside, but we didn't have a false breakout to the upside. So from that standpoint, I can't say that it's forming a larger triangle. What I think is happening is it's extending the current one. So I know that doesn't sound like much of a difference, but it's just a little bit of semantics. But I think what it's doing, because we didn't really make a new low from here, we just had a false breakout. I think it's just making a little bit of a larger or a longer, it's not larger, but a little longer triangle. And maybe you could use, if that's what you meant by larger, usually when I'm talking about larger, I mean this way, as far as highs and lows. This one is more just vertical, but it could be. Open the Australia news update. I'm not sure what you mean. Is there something that I need to see there? You're making me nervous. Ken, we will be talking about that. If the Democrats control everything, that will be the subject of the next video. What sectors to go to now? Where does the money move to now? That's exactly what we'll be talking about. So Amazon. Huge triangle. So here's one false breakout to the upside. We're back down here. We're testing it. Did we continue back? Was it a breakout and a test? And will we go higher? Or is it going to maybe come down and give us another spot here and just say, it just wasn't ready yet? This would kind of be in that realm of a longer rather than larger triangle. Oh, Carrie, thanks for the update. Republicans need to hold on to, and again, I'm not playing politics. Don't make it like that. I'm rooting for the market because I know a lot of people have retirement money in the market. And as long as the Republicans can maintain a majority in the Senate, I think the stock market does better. That helps people that have a lot of money, a lot of retirement money in the stock market. I'm not playing politics. I make comments politically. It's how do the markets react to the politics? It's not my place to push my political agenda on anybody. Workhorse. I'll look at Workhorse. I just bear in your comment of thank you for the comment, by the way. Do I have a sense that 2021 will offer a disproportionate amount of short trades? Yeah, I think tonight's going to have a lot to do with that. But even if the Republicans hold the Senate, we're due for a correction, at least in some of the sectors that have been really running. So a disproportionate amount of short trades. Do I think there's going to be a lot of short trade opportunities? I do, and we haven't had any in a while. It would be nice to put some short trades on because you make money so much faster on those. Whether it's a disproportionate amount, which was your question, I think depends on what happens tonight. That's my personal view. Yeah, I think there's going to be a lot more opportunities regardless of how things end up tonight. So Workhorse, we've looked at this one in the past as well. Didn't we look at this one way back here? I know we looked at this one a long time ago. Was it back there, that triangle that we looked at? Look at this. This is a good one here. So it breaks to the upside. There's your breakout. Comes back, retraces the breakout. Maybe we talked about that before. This is just very familiar. So it broke to the upside. Remember, the breakout gets retraced. That's a triangle rule. Sometimes it happens quickly like this. Sometimes it takes a while. Look what this one did. It broke out, created another triangle, and broke to the downside there. Came back, tested that breakout, back to the upside. So we retraced that breakout. We're going to finish on this one. I'm sorry if I didn't get the rest of your questions, but we're going to end on this one. It's just way too good from a technical standpoint. And thanks for coming back and watching this. And we'll be with you again next week. And be happy to get more of the questions then. Was a lot to talk about tonight. So next week, maybe we can get to looking at charts a little bit sooner. But here we break out, break to the downside, break up here. Just everything right by the book of Elliott wave triangles. That's why we've been loading up on them for our subscribers. This exact reason here. So retrace that breakout, and then we came back down, and now we're forming consolidation again. Now this is not as nice as those other two triangles. It's not as well formed. There's another one. Let's look at this real quick. Stock moves a lot for a $20 stock, doesn't it? When we looked at this before, was the liquidity there? Or was that a problem? No, there's liquidity there. This one has April options. That's a good spot. I haven't looked at this one in a while because I just figured that we just missed it because of all that. But look at all that. When you have a stock, consolidation, breakout, retracement, consolidation. You don't see that very often. Right back to the point of the breakout. Right back up to the point of the breakout. Consolidates again, and it's ready to go again. Probably not a low DMI. It is a low DMI. Wow. Really good one. And it's not, surprisingly enough, it's expensive for a $20 stock, but relatively it's not that expensive. Looks great. Good job spotting that one. That's probably going out as an alert tomorrow as well. That's so good. We need to add that one in here, don't we? I mean, it would have shown up on the other search. It just didn't show up because we combined the two searches. So we'll add that one in there for another strangle. It's that good. Thanks for pointing that one out. Thanks, everybody. It's good to be back doing this again. It seemed like we were gone for more than 2 weeks, didn't it? But happy to be back here. And obviously, we're going to have a lot to talk about next week. Things could change or more the same between now and then. We'll see. But thanks, everybody. Have a great week. Hope you have a great holiday season, and Happy New Year. Talk to you soon.